We now continue with our conversation here regarding the state of Kenya's economy. My guests are still here with me. Kwame, I'd like to begin with you once again. So let's expound and maybe get an understanding of where we are now. So we don't have a finance bill, but there's an appropriation bill that has gone through. Just explain to us now what happens, because Parliament has now resumed today. Of course, matters regarding the finance bill will be at the center of it. Lots of us perhaps still asking, where do we go from here? How do we navigate going forward? Also considering, Kwame, we won't be able to introduce another finance bill, at least this year. Yeah.
All right. Okay, so a finance bill was presented, or rather was passed by Parliament, a majority, a good majority to be honest, sent to the President on the basis of the protests. The President took a different view, effectively vetoed, but also advised Parliament to reject it and to expunge all its contents. That was sent back to the Speaker. The Speaker convened the Committee on Finance, whose work was just basically to ensure that it's dead, so to speak. Now, what that meant was that we had appropriations, which is the budget law itself, about where the spending is, but without the supporting taxes, additional taxes rather, the 350 billion that was to come. And so later the President, or rather the Treasury and the President sent back a memo saying we are going to make cuts in this way. And so we have a second law, which is a supplementary bill, whose work, supplementary appropriations bill, whose work is to amend and to make changes to the appropriations law to ensure that there's consistency between what taxes are expected, because the finance bill did not work, and this. And so that's it. So what Parliament is dealing with is two things. One, they have to ensure finally that they've extinguished the finance bill, 2024. I think that they'll accomplish. And then the other is now to go back to say which ministries or which departments of state are going to trim down their budgets by what amount to ensure that the budget balance is back. So that's what the business of Parliament will be for the next few weeks.
Yeah, and from those supplementary estimates, there's now, and of course, a lot of cutting down, a lot of trimming that's happening across the board. Do you get the sense that it's happening in the right places? There's obviously going to be some tightening of belts across.
No. In fact, from what we saw, the Cabinet Secretary had sent a memo to all departments of state and said that travel budgets, which were passed by the appropriations law, would be cut down immediately by 50%, which is 1/2. Now, we went back to specific ministries, and they're playing tricks. What they've done is, instead of adjusting by half, what they did was, I'm not too sure what they think they're doing, but what they did was they put in a higher number and then cut it by half and left it at the same level. So basically, some departments are playing tricks and others. I think the big ones that were really clear are consistent with what the President had said, which was certain offices, especially the First Ladies and all that. Those are not in the budgets anymore. Though we could see certain other expenditures somewhere else, but that's not in there. So yes, there's good, bad and ugly. Still, it requires vigilance on the part of Parliament, but it also requires vigilance on the part of citizens to actually go back line by line and find out how these numbers have been done. But there are areas that remain untouched. The biggest adjustments, in fact, in one of the things we found curious, the biggest adjustments are in education. So the TSC has been asked to cut its budget by 10 billion shillings. 10 billion. Now, that's not little money, even if this TSC itself takes 30 billion, 300 billion for the whole year. 10 billion cuts, and that's related to certain salaries. So we're not too sure whether that's... And yet, the JSS teachers have actually been appointed. So the TSC and the Ministry of Education, so TSC has 2, the Ministry of Education, I think another 2 billion. So 12 billion of the 38 comes from adjustments with the TSC alone. That's very curious. Yeah,
and they were going to be the biggest beneficiaries within the education sector from the finance bill.
Yes.
And we'll talk about that. So, Raymond, you talked about expenditure cuts that need to happen across the board. So, what's the feeling of the financial sector with where we are now, and what sort of cuts we need to make now that we don't have the additional taxes that we were seeking to raise?
Yes, from the banking sector and the finance in general, what we look at is much of the cuts, as Kwame is saying, we are seeing it coming from the development angle, which doesn't augur well with our plea for cutting down costs, because costs actually ought to be on the recurrent aspects. Because when you cut down on development, the way they're proposed, and which runs to almost close to over 120 billion shillings on development expenditure, that affects the whole ecosystem, because it's development that happens between private sector and government. So it has a ripple effect within the economy, in that we won't see economic activity, enhanced economic activities. And even for the banking sector, we may see a lot of slowdown on private sector lending. So that has an impact if we are not so focused on development. What you also feel is an aspect of we've been pushed to the wall, so we also need to be able to respond in kind, in that, and the in kind comes on the development, not so much on the recurrent.
Yeah.
So our plea to the government is, let's refocus on the priority development areas, be able to ensure that we are funding them well, because it has a ripple effect. And also from the banking perspective, what we are looking for is stability, consistency, and simplicity of the tax regime. So we are happy that the Finance Bill 2024 is out of the way. So that provides a forced stability, in that for 2 years, we'll be having a Finance Act, which is taking us for 2 years.
Yeah.
So that will actually be a test case to be able to see if we maintain taxes for some consistent period, 2 or 3 years, then I'll be able to do an impact analysis with businesses, be able to understand how has this worked with businesses before now we can be able to review the same.
Yeah.
And then I come to that aspect of this being able to provide an opportunity, not just for government, but even now for private sector at an individual level to reflect as a country when you're talking on being able to live within our means. Because for the banking sector, there's a trend which you've seen where non-performing loans are actually rising.
Yeah.
That also points to the fact that even companies and individuals are not living within their means. We are taking loans, facilities, and we are not able to repay them. So,
is it a reflection of companies and individuals not living within their means, or is it a reflection of how tight budgets have become, that people are actually borrowing and not able to pay back?
It's a mix. It's a mix as to you borrow, then when do you actually apply the funds to? That's the same question we're asking government. You are borrowing, both locally and external, but how are you applying these funds? So we feel that you are so much into the expenses, which are somehow unnecessary. That leads to bloated debt, unable to repay, because now you're not generating a lot of business activity. So even at an individual level, that's the analogy I'm picking it up. Even locally at an individual level, at a company level, we just need to be prudent as to the loans that we're actually being able to get from banks.
Yeah.
Can we be disciplined enough to also be able to repay? Because for me, I look at this whole ecosystem to be a learning lesson for a country, both at individual level, corporate level, and as a nation, to reflect and do things a bit different, and we can collectively be able to achieve that. And actually, that's how we'll get out of the hole. Because left on government alone, because government, it's people in government are our parents, our brothers and sisters, our children. So government is just us.
All right.
So we need collectively to be able to work to get this out of the way.
Let's focus a little bit on that, on government for a moment, and their borrowing. So, Terence, recently, Treasury went into the market.
Yep.
They were looking for 20 billion shillings. They got a meager 487 million shillings. Have we ever seen such a massive undersubscription for something that was initially painted to be so lucrative? What does that say about the sentiments that investors have in government? I mean, if you consider, in fact, was it last year, there was quite a few issues that came out and were fairly attractive and were oversubscribed. And then now here we are with investors saying, no thanks.
So two things come to play. In the recent past, we've seen the rating, the downgrade of a country by Moody's, and then we've seen this new this recent debt issue failing. And, it's all about perception. Moody's is a third-party agency that rates our credit, and then it's able to send a signal to especially foreign investors. That's where we, as a country, would tap into our external financing needs. But the locals then, from a sentiment, they're looking at what's happening. They're seeing that the finance bill has been thrown. Government then will be unable to finance the deficit. And so the market is saying that we know you need money, but you need money urgently. So you have to come back to us at a rate that we are happy with. So the rate that was offered was, investors basically were saying, no, we probably want a higher rate.
Because we are higher risk?
Not necessarily higher risk, but, well, you could say that. But also, listen, I can tell that you need money, right? Investors have a duty to their shareholders or to their own funds. So they will ask for a higher return given what they're seeing. So you don't have a finance bill, you have a deficit to finance. We have shareholders to address, So we would definitely have to apply a higher rate, request for a higher rate in case, when government is coming for the domestic financing.
It is the bonds market, or the capital markets rather, that government will be going to, because, we've heard about the plan to privatize some close to 40 parastatals. They will go into this market that doesn't seem to have a lot of confidence in government. How will that work?
So two things will happen. Remember, investors will still make the decision whether those assets are worth it or not, right? If there's a view that there are certain assets that the government is offloading are attractive, you'll see demand rushing for IPOs or those offers. You'll see, depending on how they're priced, the market will tell you, we think you should price these assets at this kind of level, right? The challenge is a lot of those assets that have been put out, we still have not been able to see the financial accounts. The investors haven't been able to assess credibility, value in those assets. And then there's still that noise about, is privatization a good thing? Generally, I think it is. I think the government is in the right place to privatize some assets, especially the attractive ones. It helps government to finance, but also it helps to deepen the markets. Then, because, a growing economy, you have much more corporates coming to market. You have much more, a deeper pool of institutions that are, are trading. And there are benefits to that. There's enhanced governance. There's much better, they run much better.
Yeah.
Of course, we've raised concerns on how some of these entities have been run before.
Yeah. So taking a look at everything that's happening, and I want to come back and talk about what the value of the shilling is today with you, and how that has been eroded, for quite some time, not just the last year or so. But Donald, so the big issue at hand in the country is matters of good governance, matters of following the law, particularly when it comes to financial spending. Some would say we have one of the most powerful laws in the country right now, the PFM Act, that really empowers Parliament in its oversight role. And here we are now with the counties as well. What's your sense of where we are with the laws? So we have these powerful laws, but still, what's happening within the political economy?
Yeah. Thanks, Yvonne. I think the most critical problem that you're facing is largely a trust issue. And a huge proportion of the citizens do not have significant trust in their governance processes, specifically within the executive. So I think there's been a significant disparity between the commitments that are made alongside, what is either implemented through legislation or practice. So I think, going forward, there are significant political economy issues that we will need to confront as a country. I think that broad-based dialogue that, has become prominent in recent days isn't the answer to what we're experiencing today.
So what is the answer?
It will not address the fiscal and governance challenges that we're having. I think the answer is really in addressing issues to do with cutting wastage, especially within ranks of the executive, addressing issues around corruption more meaningfully than we've seen within the ranks of government, and really, being a bit more transparent on the debt issue, especially, what has debt financed, and so on. So I think there are significant political economy issues which this moment has failed to address. I think there seemed to be commitment to address those issues a few weeks ago, but it seems as though we are resetting the clock to business as usual today.
Donald,
and that's demonstrated, in... Go ahead.
Sorry to interject. So dialogue isn't the answer. What is? Maybe perhaps Kenyans are looking for, okay, so what is this one thing that we do that sort of resets us or sets us back onto a path where we're saying, our economy is working and, there's fidelity to the law as well?
I think we will see that, any reforms that we action within, the coming months or years should then, culminate into improved service delivery. I think if citizens do not enjoy the services that they deserve, trust will continue to be depleted. And until then, until there is inclusivity in opportunities and so on, so it's those indicators, it is those incentives that citizens are looking at.
Okay, so just before we take a break, Kwame, so inflation numbers are down, below 5%. That would be a good place. Do numbers match Kenyans' realities? Because we churn out these numbers month after month. The prices of fuel, of course, they go up significantly and then start to go down by maybe a shilling or two in subsequent months. The purchasing value has significantly gone down. What you would get for 1,000 shillings today in the supermarket, not what you would get before. Are the numbers tallying with realities? Yes. If not, why?
First, inflation numbers aren't down. If you're measuring inflation by the declaration by the National Bureau of Statistics, CPI, which is a consumer price index, they're not down. So for June, the numbers are at 5%, which was equivalent to what it was last month. It was 5.1% last month, and it was revised to 5, so it's 5. So it's not down. What has happened is the rate at which inflation is growing has reduced. Inflation itself is not down. The only way it would go down if it went to zero or negative. So any time it is positive, it tells you that inflation is growing. Only the pace at which it's going up is down. And because you've given me a chance, let me tell you this. So for instance, you're driving from Nairobi to Naivasha, and you're going at 80 kph. Then you see a policeman and you decelerate and move at 60. It does not mean the car has stopped. It only means you're approaching your destination at a slower pace. So it is not down. And sometimes we hear that rhetoric that inflation is down and therefore food prices are not down. That's a lie. Second, food prices are not down. The other items, the inflation basket in Kenya has almost 300 goods. Food is 30% of the basket.
Yes.
So the other goods are reducing. rents and all those other things are reducing. Food itself is still growing at a higher rate than the 5%. So we need to understand those. And that's why when people say they're hungry, wearing sufurias on their heads, we should pay attention. We should not say nonsense such as they're using iPhones. So we need to actually understand what it is. The information is all there, produced by the government institution with perhaps, in my view, the highest credibility now, the National Bureau of Statistics. I don't work for them. So when I say this, I'm saying this because I examine those numbers very carefully. So Kenyans, let me conclude this. Thanks for giving me the opportunity. Inflation is not down. The rate at which it is increasing has dropped. And that is not the food component. It's the non-food component. The food component is still going up, and it's actually higher than the non-food component. That's why it's still at 5%.
Which is why that rhetoric can sometimes fall flat, right?
Yes, precisely.
Because you know,
when
we
you
see
say
those numbers,
yes, when
but
say,
that's not what we feel.
Precisely, and those people are not lying. They go to the shops and 100 shillings buys them nothing.
Yeah.
So they can tell.
Yeah. Let's take a break here on The Explainer, getting to understand where things are. And thank you, gentlemen, for painting that picture. Let's take a break. When we come back, we finish up, we go into the second part of this conversation, which is, where do we go from here? How do we start to fix all of these issues? With my gentlemen in a moment. We will be back. Please keep the questions and comments coming. We will try and get them addressed. Let's take a break.